Am I working now? Can you guys hear me? Yes, no, maybe? Yes, okay, sweet. All right, I don't know why I had to do that. I had to unplug and plug it back in again. It's an old tech thing. If you ever can't figure stuff out, guys, just unplug it and plug it back in. Anyway, all right, so the last couple of days have kind of sucked in the markets, I'm not going to lie. And today's tax day, which probably only makes that worse. Historically, not a lot of up days on tax day. So I'll just say that. And yes, hit the like if you would. That would be great. So anyway, hopefully you got to at least hear the videos from the YouTube. My boy Crypto Bubble, he has a lot to say, and it's actually pretty good advice. Buy the dip. That's what I have to say right now. Even though I think we can dip still, I'll show you how far I think we can go. I do still think it's a good idea to do. You can see my account today. I don't know. Let's just say $250,000 down again today. So $500,000 roughly in two days, 2 business days. Not my favorite number. Not going to lie. I like $500,000. I would like that to be in the opposite direction. But you don't always get what you want. And the market does what it does over shorter periods of time. So you just have to adjust. PayPal, absolutely butchered today, down another 50%. On a bright note, it's so butchered that my January 2025 calls don't hold that much value anymore. So it just lessens the downside potential. That's kind of nice. Tesla, utterly butchered, down 44,000. I didn't buy today. I'll explain in a little bit why I'm still holding off on that one. I did get some MicroStrategy, though, down about 8.5%. It looks like it dropped another percent after that by selling some of my puts. So, and then everything is red across the board. It's just down, 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 down. And again, there's the MicroStrategy ones. Sold some puts for Starbucks and Best Buy, and then used them to buy because I think we're getting low to the lower end of where we're going to be. But maybe another 4 to 6% on the S&P and Russell and Nasdaq. I mean, that's a pretty decent drop. All right, looking real quick here. So the shitcoin portfolio, the main one, getting a little bounce from over the weekend. I think it was at like 202. I put another 25 in. Might have even been less than that. And anyway, it's bounced a little bit. But today has been no good for crypto, really. If you look at the daily, it is starting to bounce a little bit. If we go to the last hour, we're getting some bounce, which is nice. But for the day, the week, you're down like a third of your money if you're in shitcoins. Let's just be honest. Like it's a pretty big drop, and in some cases even worse than that. But like Orti's down 41%. So some of these are down even more. And the month doesn't look any better, really. There's a few high flyers, but then we start to go into the 40%, even 50% on some of these like Bonk and WLD and Pepe's down 40%. So like, again, these are painful numbers for people in the altcoin market. I think it's a great entry point, but there's also a decent amount of fear and risk in the world. So, you just kind of have to balance it out and figure out what you want to get into. Right now, I'm still dialing into the things that I believe to be lower risk and highest bounce potential, which is why I bought MicroStrategy today. And we'll look at that chart and I'll explain that in a little bit too. But if you look, it was just broad-based. The pain today was a lot of suffering. Some finance did okay. The bigger banks, not all of them, not Berkshire. But the bigger banks fared okay. And again, consumer durables, some areas there that are okay. Health services got a reprieve. But for the most part, especially big tech, larger companies got some of these, like in the technology services and electronic technology, like semis, got hit pretty good. All right. And the fear was strong today, right? So the fear got us down to 41. That's actually getting down to numbers of like September. Which is closer to the bottom of our recent bottom here before we started springing, for three plus months. So hopefully that's a sign that we're getting near it. And again, I think one thing here, so S&P down, 1% today. This says the S&P is now down 100 points from its highs. Israel's response to Iran's attacks is believed to be imminent. I think right now a lot of the pain that we're feeling is just the fear of retaliation and escalation. And it's trying to drive oil prices higher. It's not totally successful, but we're definitely seeing flight to safety because we're seeing a stronger dollar, especially against other currencies like the yen, the ruble, the yuan. They're getting crushed. We'll look at a little bit of that in a second. But I think a lot of that is just, again, so I think that's the big fear today, right? Will there be further escalation? Will oil spiral out of control? And then the retail sales number came in really good today. So there's that fear too of higher for longer. So just a lot of fear is definitely in the lead today. Was on Friday, continuing again. Looked like we were going to get a reprieve. Saw CleanSpark up like 5% at one point today. But again, just the rug got pulled. I did want to point this out. Sam Rowe, he's pretty great. And this is from Fundstrat. He said, of 31 companies that have reported so far, 6% of the S&P 500, overall, 84% are beating estimates. And as those beat and are beating by a median of 10%, these are good numbers. If anybody gives a shit about earnings, it's only 6% of the S&P. We're still early, but 84% beats is not bad, and having the median beat be 10% is also not bad. So again, I know there's peak fear everywhere, and we could escalate. And I've been saying for a long time, war is the biggest threat we have against these markets right now over the short term, against all of them. And so if it really starts to broaden out, if it really gets bad, which I don't think is the base case, then we could have a lot more pain. Now, I pointed out in here, looking at the S&P, again, we got that, we just couldn't get back above it. And we did actually enclose, I think, on Friday for this one. Or maybe, no, let me see. Let me go to the day. No. So Friday we were still underneath, trying to hold on to the 50. Not a great sign going into this week. And then again, we broke down even further. And I think we could go to the 100 down here, potentially, if we don't start bouncing tomorrow, because there's just nothing to be afraid of. Or we could even get into the 4,800 range before we start to really see volume, which sucks. I mean, that's down another 5%. I think we're down like 3.5, 4 right now on the S&P. So the S&P could still go further. The NASDAQ has already dropped about 4%, and I would say it's got about 4% that it could go. And then the Russell has dropped a decent amount. And that right there, again, I think we're like 3.5. So I think some of these have kind of front run the pain, right? So I think the Russell and the NASDAQ have front run the pain more than the larger caps, which have fared a little bit better. Again, the Russell's down like, 7.5% almost, 7.3%. That's pretty far down. So it's already taken a beating, and it's starting to get support at the 200 weekly moving average, and the 50s curling up, the 100s curling up. Also, I wanted to indicate here too that if you look at the RSI, like on the daily here for the NASDAQ, we're starting to get closer to oversold territory. We're almost into the 30s. So that, again, kind of gets us to a better level where maybe we could slow down on the drop. And the S&P is very much the same. It's pretty darn close to being oversold, at least in the daily time frame. Can always go further, but that doesn't look too bad. And again, I think we're going to need really a lot more fear with earnings. If earnings are really coming in with 83% beats or somewhere around that level, even a 75%, with an average of 10% up, like that's going to be hard to keep the market down. Drew S., Chicken Genius and other YouTubers say BTC always drops as much as 70% with halving. I think he's fucking with you, man. I think he was actually joking. I don't think Chicken Genius is that stupid. I know he said something about like a huge drop coming for Bitcoin. It can drop. I've talked about that. It could do anything over the short term. It really matters more about global liquidity, and it matters more about just the macro environment. Last time, Bitcoin actually did really good into the halving, but we also had March 2020, which was fucking horrible for markets. Yeah, he was joking. He's a super fucking sarcastic dude, man. I've chatted with him personally a few times too. He's all right, but I don't think a lot of people can tell his sense of humor very well. Dress, that's what I thought too. Sarcasm, maybe. Yeah, it's totally sarcasm. He's just being a dick, and it's hard to know. He doesn't give you the punchline. Let's just put it that way. So you just got to figure that shit out. Owner Can Duman, Hong Kong's acceptance of Bitcoin ETFs does not seem to have had a positive impact. It doesn't matter. Don't judge it by the short term. If you looked at Bitcoin's ETF, it was negative for a couple of weeks, and then it changes because the inflows start picking up. So don't confuse what could be happening in the macro, what could be happening with technicals, and what could be happening just from global liquidity with this because of one day where the market was down after the ETF approvals and everything was down except for gold and like silver and some precious metals and stuff like that. That this isn't going to be positive. You can't make those correlations. They're not accurate. All right, so gold is up 1.8% and recovering from its drop Friday. Friday it actually had a pretty decent drop. It wicked up and then it went back down, and so we're trying to get back up there again. I did want to point out, though, we're oversold on the daily. We're oversold on the weekly. We're so oversold on the weekly that, on the RSI at least, that we're like our third highest level since August of 2019. And before that, it was 2011. So you could just say the fourth highest level since 2011, so 13 years ago. So a little oversold. And if you look at the MACD, I mean, you can see lines curling up that for like the third highest level going back to the 80s. I mean, it might even be further. I'd have to stretch it out more here, but yeah, since 1980. So gold is pretty overbought, and this for its move. And so again, I could see this taking a break. Oil is at the top end of its spectrum here on the daily time frame. The weekly kind of looks like that too. And if you look at the RSI here, it looks like it kind of wants to start to at least to test to roll over. And we are underneath that breakout zone. So we're either going to need a lot of fear or we're likely to start to see this coming down. So we'll see how it plays out. Again, the big thing is going to be Iran and Israel, and hopefully not too much anywhere else. The dollar up 0.17%. It's kind of deceiving. It doesn't look like it's went up too much. And again, this has some divergences trying to push it to the downside. If we look at the weekly time frame, it's kind of near, again, getting close to overbought conditions. On the daily, it's as overbought as it was in October of 2023. So this would be a good time for it to break down. I will say this, though. I wanted to point this out. So our strong dollar from not lowering rates, and just everything that we're looking at going on around the world and weakness we're seeing in different economies. The Japanese yen, the dollar is 0.66% stronger against it today. And that sucks, man, because that's taking us back to levels we haven't seen since March of 1990. And if we get much higher, it's going to be levels that we haven't seen since the mid-'80s. So you can see how this is putting pressure on other currencies around the world. And it's not great. Let's just look here. So I don't care if we're crushing the ruble. I don't even care too much if we're crushing the yuan, but I don't want to crush our friends. And yeah, so the ruble too is losing ground against the dollar. Not as much, 0.23% today. And then let's check out the yuan real quick here. See if I have that one. Let me see, Chinese. No, I got it in here somewhere. Oh, come on. All right, whatever. Here, I will just type it in here. No. Oh, I might have to do, is it renminbi? Oh, I don't even remember anymore. I'll have to find the ticker for the yuan. I'll look it up. Actually, maybe I could just type that in first instead of the dollar. No. Am I spelling it wrong? Am I tripping? Why? All right. Rim. In. Dude, I don't know what my problem is. C and Y. Oh, my God. Talk about a brain fart. Jesus. Thanks for that, man. Gosh. That was no good at all. All right, yeah, so looking at the yuan too, again, you can see where it's starting to get crushed here again. We're not up at the 7.3 level, but man, when we get above that, they're going to be seeing tons of pressure going back to 2008, where really this economy, like this is the time where the economy started to really strengthen in China. Their yuan was decreasing in value against the dollar, but they were selling more. They were receiving tons of investment dollars. It was the golden years, right? This entire time where their currency is devaluing was really some prime time for China on the world stage. And now it is gone. And again, like us crushing these currencies around the world is another reason why we need to lower rates, irregardless of inflation concerns. If we want to even attempt a soft landing, I'm still going to hold that stance. I'm not letting go of it. I did want to point out that we are almost less than 4 days away from the Bitcoin halving, which is a pretty epic. And again, over the short term, I'm not going to play a guessing game. Obviously, we've been going down, and we could fall further in Bitcoin, and I'll show you that here in a second. But I really don't care. I don't care if we go to 52,000. It doesn't mean shit to me. I care about where we're headed over the next year and a half, and that is what I would try really hard to get you guys to focus on, because it's what matters. It really is what matters. And focus on that, because that's what you should be looking at. It shouldn't be the noise. Focus on the fact that we have the Bitcoin halving. I mean, we got a bunch more than that. Let me just pull this over here. So let me see. Let me go back here. I'm going to have to shrink up my screen just a little bit. 1 second. Oh, maybe a little bit more. I wish I could get that just right. All right. So again, Bitcoin, in case you were in a cave, Bitcoin ETFs for Hong Kong. I think like 4 of them got approved. It might have been 3. We also have the news from Germany's largest federal bank, LBBW, that they're going to offer Bitcoin and crypto custody services to fulfill increasing corporate demand. And then I won't even go over all this again. I had it in my video over the weekend. But essentially, it shows the deficit that we're going to have in Bitcoin. It's a calculation from James from Invest Answers, showing how much Bitcoin is going to be taken away or created into the ecosystem, how much is going to be sold from GBTC, everybody else potentially selling, and then it shows Mr. 100 buying, which is probably a nation state, MicroStrategy buying, projections again, bought the 9 new ETFs, and then Asian ETFs buying. So the pressure is just going to be even greater than it was, guys. Hey, RJ, I'm glad you liked the weekend video, man. Really, really appreciate that. But yeah, so the pressure is just going to continue to build up in these markets. And it's something you just have to realize. It doesn't have to happen today. And correlation, doesn't equal causation. It's a saying that I don't think a lot of people understand, but really need to. Just because something happens today, like the market going down, doesn't mean you have all the answers in front of you. It could just be a bullshit narrative. It could have no truth behind it, but it's what happens and what leads to the markets. And there isn't always a thing. Sometimes it's just technical. Sometimes it's actually, again, geopolitical, like we're dealing with Israel and Iran. That continues to heat up. We could see more pressure. There's room to go either way right now. We're either going to bounce soon, or maybe we drop 4 to 6% across the indices, take a little more heat in some of these investments, and people are in safety plays, and then we start rolling up. But I still believe we're rolling up because, again, 83% of companies so far, 6% of the S&P 500 have reported, and they're beating their estimates and expectations, and they're doing it by 10% median average. So, again, just focus on the stuff. Also, Sam Rowe posted this. It was pretty good. Said, while the level of rates suggests valuation is rich, the statistical relationship between the rate of change on rates and equity multiple implies that today's market multiple is fairly valued per Morgan Stanley. We can also see that same kind of thing if we compare profits to GDP growth. So there's a number of things that are telling us that the market is still good. And there's a number of things telling us that markets have still been hella risk off. Look at emerging markets. I still don't know that these are good investments right now. Maybe they will be in the future, but America has to do well first, in my opinion. And I think that's a pretty accurate one. But if you look at emerging market equities versus U.S. equities, they're at 50-year lows. So emerging markets are seeing nothing in the way of investment dollars versus U.S. equities. So that is bound to change over time. Let me see if there's anything else. I wanted to point this out too. Just another representation of the U.S. dollar. It says currency used for global payments through SWIFT. And it's almost always the U.S. dollar. And don't get me wrong, not everything's going through SWIFT right now. But use of the U.S. dollar is still near all-time highs. All-time highs. So ignore the BRICS narrative and all this other bullshit. Focus what's real. And I think rates are still coming down. Again, let's look here. Retail sales, even ex-auto, ex-gas, everything came in better than expected. If we look year over year, again, much stronger, which gives people the fears that we're not going to lower rates. And right now, good news is bad news. That's just the environment we're in. So, I mean, that's what you get. It doesn't mean that it's real. It just means that it's real right now. All right, BD. Jesse, did you see electric article verifying Model 2 has indeed been placed on the back burner? I don't trust electric at all. They were also saying that 30,000 people were going to be leaving. And it was 15. It was 10% of the workforce, which is a pretty normal fucking thing for a company to do. And if it was Meta doing it, if it was Amazon, any of these other companies, they'd be up. But Tesla's down today. I think part of that has to do with Bagliano and Patel leaving the company too. But I don't trust electric at all. Maytag for Bitcoin. I'm just holding and staying patient. The next 12 months should show strength, but we'll see. Great talent. They will. Trust me. We've got like a decade and a half of price action to tell us what's coming next. And we've never had an environment that's more positive for Bitcoin ever. I didn't even think that we were going to get Bitcoin US-based ETFs this cycle. We got those. We got them in fucking every other country in the world practically now, including Hong Kong, which is just, again, another way for them to try and keep money, at least in China or in Hong Kong, keep it from fleeing, give them an opportunity to invest in something that is in China, which is smart. But again, like, this is a way better environment than I could have ever appreciated. And I'm sorry, we're heading still towards deflation. I posted a bunch of China-related data that shows how fucked they are right now. That hasn't changed since last week. It's still the same. They're still hella fucked. So remember that. Just because our sales are strong doesn't mean... Yeah, hit the like. Thank you very much, Gartov33. Appreciate it. But it doesn't mean, just because we have stronger retail sales and we're not falling apart yet, doesn't mean that most of our jobs are part-time in the United States that we've seen for job growth. They're not full-time. We've seen drops in full-time employment and more people having multiple jobs. That's the reality of our employment market right now. So we need to look at it as unemployment is going higher. And the Fed needs to look at it that way come June and July, because they need to be worried about what's happening in China and around the world and in Europe. That deflation will be exported. So it will bring things down here too, and we need to keep our economy going. We are the engine for the financial world. If we aren't firing on all cylinders, they're really fucked, especially with as indebted as everybody is. And since we can't handle that, since the government can't handle super high interest rates, they're having to do short-term treasuries again instead of long-term dated bonds. They need to be able to, print money and not have debts that are going to be at like 5% interest rates that they have to pay out in the future. They need rates to come down. It's another reason why they're doing short-term issuance too. They need rates to come down because they can't sustain high interest rates from a government debt standpoint. Commercial real estate can't handle it. Autos can't handle it. The residential market can't handle it. Individuals can't handle it. And there's a lag in what we do. So the narrative has changed. The Fed wants to cut rates. It's just a matter of when. But again, retail sales, super strong. Business inventories inched up a little bit, slightly higher than expected. Stacking inventories could maybe mean that orders are going to slow down in the future. So again, that could be a drag. That's a lot as far as just the regular economic data. New York Empire State Manufacturing Index was negative 14. That's a worse than expected number. Again, manufacturing and industrial, not super great right now anywhere in the world. Bunch of data coming out of China. Most of this will be bullshit. The GDP is literally like, it's less about a real number and more like about hope. Industrial production should give us some insights. I don't know. We'll see what this looks like. I don't think it's going to be good. I think it'll further reiterate what we saw in exports and what we're seeing in their housing market, and it's just a shit show. Now, the rate cut odds are 1-4 for a rate cut in June, which is not great, and it's 1-1 in July, roughly, a little better than 1-1. So still not looking great, gotten worse, not better. So again, not super great. We don't want to see that stuff. Let's pull up Bitcoin and take a look. I'll try and get caught up with chat here too. Jesse, do you think USO is a good play? I think oil is looking toppy. Can it be a good play? Oil was a good play a while ago, man. Like I know people get really interested when the news comes around for things, but like oil was a good play in December 2023. Oil was a good play. It was oversold on the daily, probably oversold or close to it on the weekly time frame. Yeah, close to oversold. That was your time to get in oil. Oil was in the $60. Do I think getting in at 85 is a good? I don't, honestly, because there's only so much impact with oil on the U.S. economy. Gas maybe a little bit more, but you got to realize we're the largest oil producer on Earth, and we literally we don't have to buy oil if we don't want to, outside of the different grades. And again, gas prices could be impacted, but there's things we can do to negate and counter a lot of that. I think I don't know. I don't know. War is probably like Palantir is probably a better option. Bitcoin's probably a better option. Maybe not instantaneously, but it will be. It'll work its way to be that. That's my take. Let me hop into Bitcoin real quick here. And again, I wouldn't be saying that if war happens a year from now, and Bitcoin is at above 150,000, then maybe it's not a good choice, right? Like it's probably not a good hedge a year and a half from now when Bitcoin's above 150K, maybe at 280. I would get the fuck out of it and I wouldn't consider it a good hedge. And I would look to see what other hedge opportunities there are. Because at that point, you could see outflows where people are using it as, as cash because they've done really well on it and they don't want to risk downside and they don't want to risk a flood because this is all about waves, right? It's ebb and flows. So, but right now, Bitcoin is still hella cheap because again, we have all these potential inflows. They will come. I've been saying this for a while. We can go down. We almost did it over here, but we can go down to 57. We could go down to 52. If we get down to 52, I think it's super fucking short-lived. I don't see us getting down into the 40s. I just don't even think that's possible at this point. I don't think it's possible. Maybe I'm surprised later. I don't think it's possible. I'm going to stick by that. Again, because there's just too much in the way of inflows and there's too many people that are going to look at it as value and look at it as an opportunity. Like Larry Fink likes to say, gold 2.0, a hedge against money printing, a hedge against global insecurity. I believe it's all those things, at least for a year. Tesla got its ass fucking handed to it. So ideally, what we would have saw today was it get popping. It did not pop. Again, I think the news, like Drew Bagliano, fuck, I can't remember. I think it's Ano. He's a great guy. He's brilliant. He's been around since the company started, essentially, since Elon became a part of it. He's been there. And Patel, too. These guys are veterans. I don't know why they're gone. They're gone. And I don't know. It sucks when you lose people when you lose like all the original members of the band, right? Whether it's a TV show or whether it's a musical group, it's just not the same, right? So there's a little bit of that going on and a little bit of sadness, I think. And then you just had a lot of stuff going on with Tesla. You got the layoff numbers, which again, for other companies, if it was Meta, people would have been like, fuck yeah, layoffs. Let's shoot this bitch up 5%, 10%. This is great. They're reducing costs. But because it's Tesla, it's a demand issue concern. Even though I still can't get my fucking Cybertruck that I've been waiting on forever and then I'm going to pay $40,000 extra for. I have no idea when that's coming. And again, I guess they have some issues with pedals, some part thing. It's kind of slowing it down too. But I still see enough demand to keep Tesla going. But I will say, I've said this for a while, they can drop hard, man. I made a video about this. And I didn't buy today just because the technicals look like shit now. But again, I said this before, and I'm going to back this up. I need to show this, right? So, and this is a little ugly, but there's like 4 distinct phases of consolidation that in Tesla's history. You can see it here back in the 2010 range. You can see it over here for years. And actually, I should even back this up a little bit. Over here where it took a long time in phase 2, and then we notched up higher, and then that one didn't go very high, but then it was just fucking launch time. So we've had like 3 phases of consolidation. They can last a while. They can last 900 days is what we had on a couple of those others. But here's the thing. Right now, if I look at this current level of consolidation, and I go back to where we topped, we're already at 882. So yeah, we can go lower. And don't get me wrong, like shit can happen. And I wanted to point out, I saw this before, I pointed this out, again, lower top, down hard. Well, over here, it doesn't look great. It's like top, maybe kind of top, down hard. Again, I think there's a good chance we fill that daily gap in the 140s. I would like to see a stop there. Crazy shit can happen though, man. We could have a W bottom where it gets down into the 100 range again, maybe a little bit higher than that, and then bounces hard. All kinds of shit can happen. You have to be prepared for it. What I want you to focus on, and what I'm focused on with my June 2026 leaps that are still give me over 2 years for it to get above 330. What I want to focus on is if we look back over here, when we dropped, this was in January 2023, look at how high we were able to bounce by July of 2023. We went from $100 all the way up to 300. So, and I'm giving myself over 2 years to be able to execute on those options plays. And again, even just buying and holding stock, this company is going to come back hard. It's not like they didn't lower their full self-driving fees by $100 a month just a little bit ago. It's not like they didn't just let go of 10% of their workforce to make their margins better. They're managing this really well. Elon told you a year ago that it was going to be a shit show. And then he told you again at the beginning of this year for Q4 earnings that it's so fucking bad that we're not even going to give guidance, right? So it's not like he hasn't been advertising this shit to you. So suck it up. It's the world we're living in. BYD saw a 43% drop in their fucking sales on their EVs. Polestar saw a 40% drop on theirs. Everybody's getting fucked right now. It's not even just the EV market. It's also we're seeing this pain in used cars and new cars. That there's a lot of inventory piling it up. You just don't notice it as much from your dealers, but it's ugly. So again, I didn't buy any today, but my intention is to still do that. I will not sell my fucking calls. I will be buying more. We ain't going nowhere. Hood. I might actually use Hood as a source of funds in the future if I need to buy more dip. I like it here. I think this is a good place for it to bounce. And don't get me wrong, I still think it's at least going to 30 here soon, and I think it's a good like Bitcoin type play. But I also think that it's done actually really good, which is why I'm not in options anymore. I'm only in stock. And also, I did that just so I could remove the multiplier to the downside, and I'm happy I've done that. But I might end up using some Hood in the future as a source of funds to like buy Tesla or buy like a MicroStrategy play if they really bleed. Because again, MicroStrategy bled at about a 2x multiplier to Hood today. It was down 9.5%. This was down 4.34. So I would use this lesser multiplier to be able to buy into some of that other stuff. Also, I should pull this up. I'm going to pull up the bond index real quick. You need to look at it. It could go to 69. No, it totally could. Tesla could go to 69. Yes, that's not a lie. That actually, I made a video about that. It can totally go to that level. It could happen. All right, bond market. I don't know if this is the move index I'm looking for. Let me go over here. Boo, boo, boo. There we go. That's what I'm looking for. I want to get this view. All right, so again, we bounced hard back into this, head and shoulder type pattern. Not super great. Bonds are taking off. Yeah, exactly, Daryl. So for Tesla, I do think that would be super poetic if, let me kill this. I think it would be super poetic for Tesla. 1 second, if I can find it here. Did I just close it? I just closed it. I think it would be super poetic for Tesla if the top this last like a couple years ago was near 420. And if the low is near 690, damn it, didn't even hit the right one. I'm so failed today. All right. So yeah, looking back here, we could go to 69. That's where we have a volume shelf over here. And I made a video about this. It would actually be, if we got down to that level, I'd go in fucking hard. I would let go of a lot of other stuff if we got in at this level to buy Tesla. I would go into a lot. But wouldn't it be poetic if we topped out at 420 and then we had a low of 69? I think that would just be a no-brainer to buy at that level. And PE ratio, what are we even at today? Let me see here. We're a 500. We're a $500 million company, and the PE is 39. It's probably lower than that. And then we reduced 10% of the workforce, so the margins are going to get better. Still a profitable company. I mean, I just got to, real quickly, we got to look at Tesla. Let's just look at Tesla. Super fast. Okay, sure, deliveries have dropped, right? Like this kind of looks like a negative trend for the last year, right? The one that Elon totally warned us about. But cash flow ticking up. Revenue segments are actually like sideways to up. Cash just keeps going up, right? Like we've got $29 billion in cash and bonds right now. And margin, auto margins X credits were actually up last quarter, which is fucking insane. You get rid of all the credits and they're going up. And the operating leverage still looks fucking beautiful. Look at their expenses. And their expenses just went down because we're getting rid of 10% of the workforce. So like this company is still beautiful. And the only thing people are focused on is the flat revenue growth, even though this company is just growing and growing and growing. And again, energy, like if we get a hint of rates dropping, we're going to see things go up dramatically for these guys. And profits per vehicle, they ticked up last quarter. Shitty quarter, $7,500 per vehicle. I got something I want to show you real quick. Real fast. It's something my boy James from Invest Answers posted. It shows profit per vehicle for Q4 for all these other fucking companies. So, again, these are in dollars here. Volkswagen, $957. Tesla, $7,500. Maybe they're $8,000 or more, $9,000 this next quarter, or at least Q2, right? Because of reductions in cost. Honda, $668. SAIC, $516. We know that Tesla was already 7 times more profitable. Well, 5 to 7. I can't remember the exact number versus BYD. But look at GAC. Look at Geely, $372. Nissan, $168. Ford, negative $762. Li Automotive, negative $883. Xpeng, negative $10,000. NIO, negative $15,290 per vehicle. Then you got companies like Rivian that are fucking worse than that. So Tesla isn't that bad, guys. I'm just going to throw it out there. It's not fucking that bad. Get over it. Suck it up. Buy the fucking dip. Don't buy options if you're really concerned. Just buy stock. You could always get options later on. Use your fucking brain. And don't get feared out of this market. Especially when we're getting closer to oversold conditions on the RSI and the daily. Again, if we bounced into tomorrow by some fucking miracle, maybe Iran and Israel aren't attacking each other nonstop, then this could still be a bullish sign. Either way, this particular pattern shows that this thing wants to bounce. It's just its underlying fundamentals that need it to, right? Like Bitcoin needs to have some positive price action, but this still has a lot of support in the 1100, 1200 range for MicroStrategy. That is not a bad thing. CleanSpark. I know these guys had a price target raise today. I don't remember if it was 27 or something, but look at this. It's still holding support, man. It's insane, but like, look at this. Look at this. Look at this. Look at this. This is grind right here. It's like something wants to push it higher. Can it drop? Yes, it could, right? Like I said this yesterday in my markets on Monday, whatever the fuck I called it. I don't remember. Right now, I said 27% downside. Now it's only 21% downside, right? But we have 70+% to the upside potential in CleanSpark right now. So these are good numbers. And again, maybe we go all the way down and just close the whole gap on CleanSpark, whatever. It can happen. Let's just say we close the whole thing. You're still looking at a 1 to 3, right? Like 3 the upside, 1 to the down. Good ratio. It's a number you want to see. You shouldn't be scared of it. You should be happy. Let's look at PayPal. And again, so what did we end up down? 1%. 1% on this mother. Thank you, CleanSpark. A miner that almost made money today. Sweet. Love it. All right, PayPal. PayPal was looking pretty strong considering. Let's see where it ended. Down 1.67. Again, we're underneath this area that we need to break out above. Still above peak volumes. It wants to maintain strength. It's still down. It's still down 79.5% from its all-time high, which is pretty fucking far. So it did all right. Lost a bunch of money on it today. But again, my downside risk is mostly in my 2025 options, right? And those are looking safer by the day because they've lost so much money. All right, SoFi. See what I did there? I did a little rhymey rhyme. Hey, if you guys haven't liked, I see 471 current viewers. Please like this. I put a lot of effort into it. And if you would like the post, I mean, there's been greener days, but I think I'm providing some value. Now, SoFi, down 2.86% today. Again, it wants to bottom, man. It really does. It's got the potential for a lot of upside. It's starting to hit that 0.5 level. And then we've got our downward trending previous resistance that it's turned into support recently, and that I think it'll try and find again. The oscillators want to flip this thing higher. SoFi is looking close to a bottom. I've just got so much other stuff I want to buy right now. It's really hard to focus on any of that. And I'm 100% out on Palantir. I will update. I said I was going to do it over the weekend, and I didn't. I will update my chart. Again, you can see the weakness on Palantir. Down 3.4%, down another 0.46. Could get a little bounce off the 2150 range right here at the fib level. I wouldn't be surprised if general markets go lower tomorrow. But really, we don't start to see a lot of love until 20. And then we'd fill that gap at 18. So again, it's possible. I know people don't want to hear 18 after they heard 28 and we're thinking 30. But it just is what it is, guys. ARKG was beat up pretty good. Cool. All right, let me check that one out. Yeah, so if one of my investments starts bouncing, I know there's a bunch of shit for me to move money into. ARKG, yeah, it broke under support, which sucks, right? Like it found it here and here. It found it over here for a little bit and went underneath, but it just couldn't find it today, which blows. It is bouncing after hours, though, because it does want to get back above this. But who knows, man? I mean, maybe we get into the low 20s. But I'll just say this, again, from where I would expect this to be, I'm just going to dial this down here. So I think that we can have an easy 41% upside coming in the months ahead on this particular investment versus a downside. Oh, that's not what I wanted. Drew that the wrong way. 1 second. Versus a downside in after hours, let's just go from that, of about 12% for a W bottom. So again, I think your upside is a lot better of an opportunity. You're already oversold on this on the daily time frame. This thing wants to go higher. It's established higher lows on the RSI going back to January of 2022. Again, the next one, the high here was in June. This next time, it was higher in October 2023. And we're higher right now. Even if we drop down to this level, I mean, we're probably still going to be higher. So again, it's one of those things where we got some bullish divergence on this. It wants to go up. It really does. Even while I'm working, Disease Kodak, I always like your posts, even while I'm working. I don't know who doesn't. Much respect. Oh, thanks, man. I appreciate it. I try to provide value. I don't know if I can accomplish it every day, but I'm trying. Matterport, I didn't even look at these today, like my lowest things. Yeah, it got hit pretty good, 4%. Still bouncy, though. Up 1% in after hours. Maybe we establish a new low here. Again, this is very much driven off the rates narrative, so I'm not expecting much love from my calls on Matterport. Really hoping for like a MicroStrategy or CleanSpark bounce. And that way I can like get more into Tesla or something like that. Jesse, do you think Mara and Bitfarms will recover? Yes, I think everything will fucking recover. The shittiest of miners will be okay. Mara needs to just get their shit up. If they do that, they're going to have a positive narrative. Bitfarms, I don't know, man. It's so small. I could just see them getting bought out. I would think they were a good acquisition candidate. Why is Palantir down with all this war stuff? Because they're just really overextended. Something doesn't necessarily have to immediately act as like a contrarian, right? Like Palantir, if we look at Palantir, Palantir still today is up 270%. So the same narrative that I gave you and that's from December of 2022, right? So if you invested in this about 15 months ago, you made 270%. That's why. It's because it's a $50 billion company right now for a market cap, and it gained 270% value over a short period of time. So people, if they're looking to buy a dip, they're like, what have I really done well with? And normally, the things you've done really well with, like if you had a Meta and you've made 500% returns, like maybe you're going to sell some of that shit and look towards Tesla getting crushed or MicroStrategy getting crushed or something else. You're not going to look for the thing that hasn't dropped that much yet, really comparatively, compared to how well it's done. So it's just another thing to consider. Like I said, I don't think Bitcoin would be a good hedge a year and a half from now if it's like $150,000 to $280,000. I'll probably sell a shit ton of it and get into cash and or other investment opportunities that have underperformed. So just like think that way, man. It's an ebb and a flow, and you want to know like what are the things that are down at the trough and what are the things that are getting ready to climax and have a wave that's going to break down. Like you got to think that way. It's very important. All right, let me pull up Flux. And Flux was down 2.55. Trying to find support on the fib. Not too bad, actually. Kind of impressed with how that one's done. Let me do DLO. Latin American play here. Latin American e-commerce. Probably taking a hit. Down 3.51. Not too bad. Again, just kind of rejected under the fib level here. We'll see what it does. Let me see here. Any others? I might just jump into your guys right away unless anybody has something else they want me to talk about. I might just start at the top here and work my way down. Rishab Singhvi. Hopefully I'm saying it right. Hey, Jesse, could you please take a look at Aspen Aerogels, ASPN? I know I don't have that one, so I will take a look at it. I'm going to look at financials first, though. And then jump into the chart, because I like doing it that way. I don't know. All right, financials improving, right? Revenues are going up. $84 million in a quarter isn't bad. Revenue growth 41% year over year. Only a $1.2 billion cap. And cash flow, net income positive, and cash flow is getting close. So that's cool. Not a lot of dilution for a year, really. It's kind of flat. It's nice to see cash getting above debts. More of that should continue. Looks like the pace of operating expenses is starting to go down. Let's look at estimates. Estimates still look good. EPS drops a little bit. Q2, Q3. I think a lot of people are lowballing. Institutional ownership's ticking up. The last couple of buys are, between insider activity, are large buys in Q1 of 2022. So let's look at what the stock looks like, because people really thought it was undervalued in Q1 of 2022. And that was when the company, let's see what they had for revenues. They probably grown like 120% over that time, maybe 130. So that's a pretty good increase in revenues over that period of time. And Q1 of 2022, Q1, you were seeing, $7-8 million in losses. But what's the stock look like? Let's look here. Do a make copy. ASPN. Makes me think of aspirin for some reason. Need to put it up here. All right. Market's waiting for Palantir earnings. Market's probably waiting for a lot of earnings right now. And you just have to think, today's tax day. Like, people that are waiting last minute that don't want to pay their taxes, They've probably been cashing out stuff, and today would be a little late to cash it out, but maybe they took some out, have some dip buying, and they had some other stuff that already, already closed for transactions. But a lot of people are maybe just selling because they're like, shit, I just paid a bunch in taxes, and and now I just want some cash to feel safe. I could see that. But yeah, so you got a clear rejection off of this one. The aerogels off of the 200 moving average on the weekly, which again, there's no better indicator of a bull or a bear market. And then you've got some bearish divergence that started in like December, pushing us down, but the price was going up. And then just general market weakness. But this thing was $5 and it got all the way up to 18 something. So this had a good run. Let's do a trend-based fib extension real quickly and see what it's sitting at. Also, if you guys, again, could like, it only takes but a minute to like. I don't know how many people. Can somebody give me a like count? How many likes do we have right now in this video out of the 452 people that are still here? It'd be nice to know. All right. So yeah, we're underneath the fib. I think if it's a tough market tomorrow, I mean, we could go into the 13s still for this. This kind of looks like a double top up here. And then again, off of a strong resistance zone of the 200 moving average, which is still climbing higher. So that might be tough to get above for a while. I would say a lot of this measured move is probably done and that there's some better opportunities. 157 likes, 2/3 of you don't even like the video, and yet you're still here. Not cool, guys. Please like. Oh, yeah, maybe you do. Maybe it's better here. Mine, yeah. What does it say after the refresh then? What's it look like there? All right, and let me look at the next stock here. What are we looking at? Elise 98. Hey Jesse, what do you think of HPQ for a short play for this coming months? Isn't it possible downtrend? I appreciate it. HPQ, let's look. I don't know if I have that one. I feel like I do. So let me. Nope, maybe I don't. All right, let me pull it up. All right, well, that's like marginally better, guys. You still suck on average. 2/3 of you suck. But the other third, you guys are cool. Thank you. All right, HPQ. It's either that or my haters think I provide value, but they don't like me. One of the two. Hey, man, as long as you're here watching, that helps too. That is supportive. All right, so the weekly here, this does look like something that could roll over. What are we at? It's $27 billion company. It's HP. I need to look at their financials and forecast. I mean, there's a lot of history here, man. There's a lot of history. I don't know if this would be a good short play. I mean, it's obviously done well over a short period of time, right? If we go to April of 2020, it was $12, and then it went up to 41. That's pretty good for HP. But let's just go back here. Let's look at Hewlett-Packard over here. See what the damage is lately. Revenue has been in decline. I'm willing to bet it's been in decline for a while. Yeah, not great numbers, right? Started to go up a little bit. Maybe you got some hope into 2021, and then it's just kind of been dashed. Estimates going forward are not much better. So this is just kind of flat. Not a lot to speak about. Let's see activity. What do we got for it? I mean, that's a pretty big sell candle. Obviously, they appreciated the stock more in early 2022 than they do now. I don't know, man. Short interest is increasing. It doesn't look great for the company. It doesn't look like it's going to go up a lot. And what's the PE? I didn't even look. Let me check it out. It's 8. Wow, it's so low. I don't know, man. This is a tough one because it's just so low already. Could it go lower during a major downturn? Maybe. I feel like there's other things that could get crushed way worse than this. Like I still think Starbucks is a good short, even though I sold some today to buy other stuff. But I don't know if this is a great short play or not. It's just so low. It's got an 8 and a forward of 0. It's like what? All right, let me see. Gartov afternoon. Today I bought some Cypher. Let's see how long it takes to take off. I think these are good levels to buy, man, for people that still have cash. You also said, hope everything's okay. Could you see Doc Software and Services Co. Thanks. Let me see here. Was that your first? No, that was your first. Okay, so let me do it. I missed that one. I'll pull it up. I don't know if I have docs though, so let me just do this. Doesn't ring a bell. All right. Is it Amdocs Limited? I'm gonna say it is for now. Is that what you said? Let me see over here. Yeah, watch video, like video. It's not that hard. Commenting is optional, but it is nice to like it. All right. Let me see. Docs. You just said docs, but I don't know. How can you explain why Starbucks is a good short? Yeah, I've got a post about it. Give me a second and I'll show you. It's partially because they have over 3,000, maybe 4,000 locations in China right now, and China is a complete fucking shit show. They also have like 35% of, maybe 40 now, percent of their earnings coming from overseas, and overseas is shit right now. That's a lot of it. And if you just look at how Starbucks, look at it this way. If you go back, and I'll show you this from my chart with Starbucks, but if you go back and you look at the 2008 great financial crisis, when people are losing their jobs, they stop buying $5 coffee. It's like the first fucking thing to go, right? Like you're like, do I really need the Starbucks today? You know what? Maybe I'll get a K cup. Costs a lot less. I'll do a K cup, and I might get the creamer. But again, the margins just aren't there. So they really shit the bed in 2008, and I'll show you that in a second. Amdocs, is this the right one that you wanted to look at? Yes, Amdocs. Okay, cool. All right, so let me pull this up. But yeah, we'll look at Starbucks in a second. I'll show you what my thought was there. Again, I did just sell some today, though. So, but I do still think the January 2026s are pretty good for puts. Amdocs Limited, so 5% year-over-year revenue growth, kind of slow. Net income, what are you at? 540 million. That ain't a bad number. 9.9 billion, 18 PE, forward 0. Cash flow is pretty good. It's a decent looking company. Doesn't look overvalued at all. Their revenues are going to decline a little bit. EPS is going up though. Is there any insider activity, any positivity? Institutional ownership's dropping, so they're not carrying as much. No insider activity. Short interest is up. What am I missing here? Shares outstanding are in decline, so they're buying back. They're out of St. Louis. They're software infrastructure. They're mostly institutional. Virtually no insider. That kind of sucks when insider is that low. Retail is very, very low. I just wish they had growth. It's probably fairly valued without growth. That's my take on this one, probably. And again, it's ran so well. Like if you go back here, when is March 2020? It's over here. It was 44, so it's doubled. Not bad. What do you think about the BTM stock, Bitcoin Depot? I don't know what that is. Do you know what it holds? I might have to do research on that one, Patrick. But here, real quickly, let me pull up Starbucks. I need to tell you guys about the Starbucks short. And then I'll get back over to requests here. All right. Oh, ATMs? I mean, ATMs, I know that ATMs personally, I've got friends that have had money in ATMs. They're not great. All right, so here was the short. Here was the short thesis, right? Starbucks gets fucked during bad times. They get utterly fucked during bad times. We can see this if we go back, right? Let's look over here. This is August of 2019, doing really good. March of 2020, shit gets really scary, right? Starbucks goes from 85 to 46, gets cut in half. One could argue that, okay, that happened, right? And then you see weakness, again, with Starbucks over here, August 2021, and then just how far it went in June of 2022. Just a massive, so it was up in the 120s, dropped all the way back down to 65, another 50% drop, right? We also have, from a technical standpoint, what is a rising, broadening wedge. That sucks. That could mean revert to $50, okay? So that sucks. That sucks if you're Starbucks. Also, if we go back a ways here and look at Starbucks at 2006, and then really kind of when things started to go shitty at the end of 2007, just to the bottom. It's hard to see here, but that's a 74% drop that this thing undertook in a period of about a year. So during the great financial crisis, it dropped 74%. We know they have tons of international exposure. We know the technical setup on this is shit. And we know that it is a rising, broadening wedge that looks like it's trying to print its right shoulder out of left shoulder, head, right shoulder, lower lows, and it looks like it wants to break down to here. And if it breaks down to here, again, mean reversion for this thing is 52. So I think that this is a decent put play, but I will say this. If you look here on the weekly, we're getting closer to the RSI being oversold. So if we get to 79, 80, something like that, this might want to have one more bounce, trying to get up maybe into the 80s before it eventually can roll over. But again, these guys are in for some potential pain just from China. And again, international markets in general. But a lot in China because people just aren't buying there anymore. Revenue growth, 8% year over year. Nothing crazy there. Estimates going forward kind of show a topping out in revenues and show EPS being okay. So no real signs of pain yet. I think a lot of what they've experienced, and again, you can see how they've been doing share buybacks. They've got a lot of debt, but they also have people that they've got money too sitting on the sidelines from people that buy all these Starbucks gift cards and don't use them. Maybe they'll start using them now. I don't know. But cash flow and everything looks still pretty good. And yet the stock, I think, just on the narrative of pain in China. And now we're underneath the 200 moving average again for the second time in the last couple of years on the weekly time frame. That sucks. And then if you look under here, it's like tested under these levels now for what is the fourth time going back, to 2018. And then if you look before that, it was above the 200 weekly moving average since March of 2010. So it rode above this thing all the way until, 2018. So it made it 8+ years. It was above that number. And now we keep testing underneath of it. And so it's a scary sign that this next one, maybe we drop down to here, we test back up, and then we just never get back above it and roll over. And with what I'm seeing in international markets, especially China, I still think this is a decent short play. So that was my thesis there. And I had a post about that a while ago, but that's that. All right, let me get back over here. MicroStrategy earnings date is April 29th, Gartov says. Yep, we got a lot of earnings coming up, guys. There's a lot of earnings. If I go over here to the earnings calendar, we're starting earnings really this week. I told you they're already positive. But if we go up here and start looking at, I guess even the monthly, it's just earnings nonstop now. They're really kicking in. So we're going to have a whole bunch of them. And if I go to my favorites, stuff I like to follow and I'm invested in, the